This is Tom Clabb with a special report for SRS listeners. Let's get right to it. We've got a lot of questions since we had this last special just for SRS listeners. We'll cover some of them. I'll start with the first 5 months of 2022. We've seen the gold market is the only investment indices go up. All the bonds, stocks, even silver have gone down, and there's reasons for that we'll get to in a few minutes. But right now, for this year, 5 months, today being the 31st of May, 2022, is the gold is up 2.5% for the first 5 months, while the Dow is down 9%. The NASDAQ is down 22.5%, and the S&P 500 is down 16%. Just by doing asset allocation, having 20, 15, 20, 25% of your assets and hard assets, the loss would have been made up by the kind of losses most of y'all have taken that are in the stock market as your major place to hold money. But more concerned than that is the Bloomberg aggregate, the aggregate bond fund that is down 12.6%. Its first drop in 17 years. To see the bond market topping out, interest rates are going up, bonds are going down. So you look at it right now and you say, why aren't more people in gold? Central banks are buying it. Russia's used it primarily, and every penny they can get is into gold. And so are the other central banks, because they know as we come to a crossroads in world history, when we're going to start seeing all these digital currencies coming, the thing that's going to be part of it is going to be gold. Gold is the only investment that trades in all 28 world markets. So it's got to be part of a reset. It's got to be part, and you want to have money in there as your base of investments. That's gold. It's been that way throughout history, and it'll be that way. It'll be back to that way. We've been in a 45-year, 50-year since Nixon killed the gold standard, but all that's coming back around. So as you look at the Bloomberg aggregate bond fund, money has come to the sidelines. They've come out of stocks, out of bonds, and they've come in and gone into treasuries on the short term. That has driven the dollar up. The dollar has gone from 95, the world index, to 103, but in the last week it's come back to 101 point something. But here was interesting. When the dollar went up 11% the first 4 months of the year, gold went down 11% before this big recovery. Now you look at it and say, what's interesting is for every time the dollar goes down 1%, gold historically goes up 3%. We just saw it again last week when gold got below 1,800. The dollar dropped 1.2%. Gold went up $56 in 3 days. So watch the dollar as your key indicator, because as it goes down, is in a basket against other currencies, gold is a major benefactor of that going on. Let's talk vaguely or quickly about Rick Edelman, highly respected money manager, sold his firm recently for several $1 billion, and the company that bought him has over $200 billion. And to see that they're talking about the future, the stocks to look at are financial technology. This is where it's headed, the whole world. So there's going to be stocks out there. I don't recommend them. I'm not in that business. But the other thing is gold and hard assets. And I am in that business for 47 years, and I understand it. So you look at it now and say, middle class America is getting killed. They're getting killed. Inflation is running up, is running up every week, every month. 44-year high for inflation. And the only thing we can do about it is to raise interest rates. The Fed is probably going to do that in June and July. The question is, will it be 0.25% or 0.5%? I say it's 0.5. That would be 1%. That alone, just on the interest of the $31 trillion budget deficit we have, 1% would be over $300 billion in interest increase right now. $300 billion. So you look at it and realize that we've got some serious problems. But I didn't make my first prediction back in January when I predicted where gold was going. I still say gold's going over 2,300 in this year, 2022. Big money is moving to gold as quickly as they can. Even if they don't want a lot of it, they've got to have a base in it, because that is what's going to be accepted. It is going to be part of any kind of reset in the future. So that's number one. Inflation, the only way to kill it is to raise interest rates. You raise interest rates, you kill the economy. You kill the economy, we're in a recession. Pretty simple. Now, a few other points to make. Silver. I love silver, but it's not time yet. It went back down and tested its low and broke below, went below 20.50. And it has come up 8% in the last 10 days. That's good. But we're still just in the low 22s. We still want to get back up on 26, 27. We can get a breakout. I think silver is going to go to over 50 for the third time. But it's not going to be this year. Probably won't be next year. But we will get it turning. And the demand for the solar panels and electric cars is not going to stop. So that's going to keep taking silver off the market. So keep going in. When you have a little extra, buy a little extra. But just keep piling, cost averaging your silver. That's the best advice I can give you. But the timing on silver is very hard because of what I just said about interest rates and everything else. Debt is out of control. We're now talking about forgiving $10,000 student loans to people. The ones that have already paid off, they get no benefits. It's just another way to buy votes. It's very scary. You look at the federal budget, right? These next three things have all happened in the last few weeks. Number one, we had a budget of $4.2 trillion was okayed by the Congress to be the budget. We now have spent $6.2 trillion. $2 trillion, first time in history. Any president has had a $2 trillion deficit, and we got 4 more months to go. Just think what that deficit's going to be when we get through, and you start ticking that 2.5%, 3% interest on the debt. That's $900 billion, nearly $1 trillion in debt, and this is just on the budget deficit debt. It's not the debt that we accumulate for giving Ukraine $40 million. It doesn't count in the budget deficit. It's altogether a different categorization. So we look at it now, we say, the next thing that came out that shocked us, people that follow M2 money supply, money being created by the Fed, money growing, money in bank accounts, money in brokerage accounts. We've seen that go for the first time. Then back up, the year 2000, when they started keeping this, it was 4.7 trillion of the M2 money supply was 4.7 trillion. Today, 22.2 trillion. 5 times money creation, 24 years, right in your face, and nothing to slow it down. It's a runaway freight train. Money supply just keeps being created to keep this country from going under. Nothing to back it, nothing. Credit card debt, first time, hits $1 trillion. 1.115 trillion, 4 more months to go before the fiscal year is over. Total debt is out of control. I beg you, if you don't do anything else watching this tape, is to go to debtclock.org. Debtclock.org. Please spend about 30 minutes and realize where we are as a country financially. I beg you to look at it if you never have, and if you have, refresh yourself and pay special attention to the right bottom corner where they put the price of what gold and silver should be based on the creation of all this fiat currency, money by decree that we look at every day. So you've got a great opportunity here to place for the future of your family, your retirement, your children, your grandchildren, is to get your asset allocation. If you're dealing with a money manager and ain't got gold in there, I'd look for another money manager. How can you call yourself a money manager when you're investing in things going down and passing on the things that have been going up and will continue to go up? If you sit and try to make common sense of everything I've just told you in all these different markets, you know you're going to get killed. You can't go back in. I mean, stock market could get a lot worse before it gets better. And look what the next 30 years is going to bring for Russia and all the money there to redo. The globalists, the one world government people, they're the ones that are going to get wealthy and wealthy. The middle class will get squeezed and squeezed and squeezed, as they always have, because that's where the most money. But the questions I get about, will Biden's administration take your 401k? I can't answer. I get that question once a week at least. They read things that say he's going to confiscate and put all your 401k into a treasury. I have no idea. I can't help you with that one. But you just know that not many things are happening good financially with this administration right now, and the spending, I've just proven to you it's out of control. But please go to debtclock.org and spend some time on that. Now, if you haven't heard about icecap.diamonds, I urge you to visit their website, icecap.diamonds. Call us, because this is the hard asset opportunity of the decade, to see something as portable, as confidential as diamonds now having a liquid way out and a guaranteed grade forever. And because they are portable, they can be taken anywhere in the world. But it's worth listening to. May not be for you, but it may be just what you're looking for. But call our office at 800-247-2812. That's 800-247-2812. And tell Dan or Catherine that you want to talk to me about diamonds, and I'll personally call you and talk about it. And I'll send you an outline before we talk. But hopefully we've caught up some. You don't need to know what Energy's doing. Steve is doing an incredible job if you're following him. And we do look for gasoline to continue to squeeze the middle class as it moves towards $7 and $8, I think, before it tops out. Steve knows a lot more about that than I do. But where we all agree on is it's tangible, hard assets that are going to be the biggest winners for the next several years. My advice is get positioned. With a special report for SRS Rocco, this is Tom Cloud signing out.